Hey traders, John Howell here, and in today's video I'm going to be talking about I'm going to be playing a video here of Ray Dalio and why he says that this time right now is different than 2008, and in fact it's actually worse than 2008. So in this video here we're going to be talking about why this situation, this coming sort of breakdown of the system, depression if you're going to call it that, is indeed much worse. And why is it actually much worse than 2008? What's the differences between now and 2008? And then also at the very end of this video, I'm also going to be covering what I believe is going to be the best sort of sectors out there that are going to do really well. So even though it's a breakdown and we do see a lot of calamity continue to happen throughout the rest of this probably next couple of years, we're going to talk more about that. Or Ray Dalio is going to talk about how long this is going to last, and he says around a couple of years as well too, how long this is going to last, why it's worse, and then also at the end I'm going to talk about probably the best sectors out there that are going to do really well. So if you're looking at different sectors for long term, then I'm going to tell you why I think these certain sectors are going to do really well. So let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into the video.
And so you've talked about there's sort of four levers to recovery after a depression: cutting spending, also known as austerity, debt restructuring or forgiveness, redistribution of wealth through taxes potentially, and printing of money. Some of these things you've mentioned. Will those things get us out of this situation, since as you feel it's happened before? But how would you think about balancing these tools right now?
Yeah, those are the tools since eternity, basically, since recorded history. Those are the ones that operated. And I think what you're going to see is a combination of printing money and redistribution. And I think it'll last. These things happen pretty quickly. They last maybe a couple of 3 years in terms of that process. And then you have a rebuilding, and they're dealt with creativity. The greatest force through time.
So you can see here, as I'm playing this YouTube video here, is that he's saying it's going to take probably 2 or 3 years for this thing to fully unfold before we start to rebuild again. And what he's saying is, in a sense, what's happening right now is because the debt is now getting to a point, and we're gonna print more money, but we're getting to a point where we're going to start to restructure the debt. We're going to start to default on the debt. There's going to be a lot of pressure on the government, and we'll talk more about that in a minute. But there's going to be a lot of pressure on the government, and so therefore, if you look over history, and you look over time, you'll be able to see that. Let me just bring this screenshot up for you here. You'll be able to see over time, back in 1930s, and everything is in cycles, guys. That's all. The best thing that we can do, and me as even a coach to you guys and a teacher of you guys, the best thing that I can do is just to educate myself based on history, right? Because really, us humans, we think we're doing something new, right? We think we have a new feeling or a new thought, or a new situation. You know, we may be going through a different situation, like why, and we have the feeling like, why am I the only one going through this? Well, if you look back over history, right, us humans, we keep doing the same thing over and over again because we think, oh, this is new, this is unique, this is different. And if you look from a coaching perspective, like me as a coach, then I look at all you traders out there, and I guarantee you that 90% of you traders have the same similar situation of why probably you're not doing well in the markets, why you may be lucky, maybe not, and so on and so forth. Makes sense? There's many coaches out there, and so us humans, we think that our situation is unique, but when we really look at the big picture, it's very similar to most situations, or to a lot of situations out there. So he's talking about 2 or 3 years of starting to rebuild here, and so this is the breakdown of the debt. This this red line here is the debt itself. And when we start to default the debt, that's when we start to go through a new way of doing things. And but the cycle will repeat over the next 2 or 3 years. And as Ray Dalio said, over the next 2 or 3 years, we might get a little bit more upside, but over the next 2 or 3 years, we're going to start to see this in the red line. What is that? Government's really starting to squeeze on debt restructuring. And what's also going to happen through here, not only are they going to start the debt restructure, but they're probably going to start to raise taxes on the wealthy. They're probably going to start to increase taxes. Now, they may not say, if it is Trump, Trump may not say, oh, we're going to raise taxes on the wealthy. No, he may just start to put, you know how they do this sneaky taxes, right? Like they say, okay, we're really going to drop your tax, but on the fine print, we're going to increase goods and services tax or something like that. You know what I mean? Like that's the way they do it. But they're probably going to start to increase taxes on the wealthy to start to bring there's a wealth gap here, and the wealth gap is top 1% up here, and the sort of the top sort of 60% down here. And so what they're going to try and do is, one, default on a lot of this debt, two, increase these taxes here so they can actually bring a lot of this wealth down, and hopefully decrease these taxes down the bottom here to bring this wealth gap back here together, because there's a massive wealth gap where we are right now. So that's what they're probably likely to do. If I'm looking at a history myself, is that 2 or 3 years, in the next 2 or 3 years, we're going to start to see taxes increase on the wealthy, and the people that have lower incomes, they're probably going to start to get a lot of really good rebates. Like there's potential that maybe, depending on how much you've actually made, that you may start to get, tax rebate forms and tax rebates and tax basically refunds. In history, there's been times where, every penny you've paid over the last 10 or so years in taxes, you may get a check in the mail saying, here you go, spend it. So that's what Ray Dalio is talking about there. So let's actually continue with, let me actually remove this here. Let's continue with this video.
Is inventiveness, human inventiveness, adaptability. So you're going to see these restructurings happen, and you're going to see the kind of inventiveness that you just saw from Marco, okay? And it's the power of that adaptation that is the greatest power. I did a study, which is on LinkedIn if anyone wants to see.
So if you heard Ray Dalio mention there restructuring, there's going to be a major restructuring. And once again, he's talking about major restructuring is basically the world debt. And basically the way that we have been running this system really for the last 10 years, probably even the last 20 years. But especially the last 10 years, the way that we have been doing things. If you think that the way that we have been doing things, the way that things have been for the last 10 years is going to be for the next 10 years, you're going to be a rude awakening, because that's one of the biggest things to us humans, right? Like we think what is happening right now is going to continue happening. And one thing that I have learned through my entire life is that everything goes in cycles. And that's where, like, if you read Ray Dalio's book, the Big Debt Crisis book, you understand that it's a cycle. Everything goes in cycles. And if you look at your life, right, you understand that as well too. When you've gone through a really amazing time, does that stay there, or does it start to go back the other way a little bit? We might have an amazing time, then something might happen, and then we don't. It's like our energy, right? 1 minute or one sort of maybe a few hours, we're absolutely, oh man, I'm feeling amazing right now. And then suddenly a few hours later, you're like, what the hell happened to my energy? I'm feeling low right now. Like everything goes in cycles. And so that's the hardest thing in the human behavior is in our human sort of DNA, is especially those people that are not big vision thinkers, like big cycle thinkers, is that we think what is happening right now will continue to happen. So if we're going through, I remember when I first started trading, and I lost $250,000. I lost $250,000 in the markets, and I almost went bankrupt. Had to sell my house, my car, move back with my mother-in-law. It was really bad. Now that was going on 13 years ago now. I've been trading for 15 years. And so at that time, right, for me personally, at that time, I was like, man, this is never going to end, right? So if you're going through a bad time right now, I just want to give you a heads up that, you may be thinking, man, this is never going to end. And my encouragement to you is that it will end. And what you're going through right now, you're going to learn lessons that in 2 or 3 years time frame are going to be absolutely just amazing to your career. And if you're going through a really hard time with your trading right now, maybe you're getting beaten up. Maybe you want to sit back and say, okay, let's look at the trades I'm taking. Why am I taking? Let's look at the position sizes I'm taking. Why am I taking certain trades? And let's start to put together a plan of, okay, I'm risking too much money here. I'm taking these trades that don't seem to be working well. What are the trades that actually do well that I'm actually taking? And if you start to look at that, it's okay. And now you can see you may be doing really, really bad. And that's what I did when I lost all that money. I went back over all my trades that I took, and there was some trades in there that are absolutely stellar trades, and there was some trades that are just absolutely just blowing my account up trades. But through that process of it, I sat back and looked at all the different trades that I took when I lost the $250,000 and almost went bankrupt. And then I started realizing that there was a common theme to the reason why I was losing so much money. From the different trades, that there was certain patterns that did really well for me, and there was certain patterns that didn't. And then there was certain ways that I was managing these trades that did really well for me and that didn't. And the third thing was there were certain ways that I was risking, like the certain amount of risk. And I realized when I started risking too much money, I started trading erratically and not just letting these trades go. And therefore, I was also losing money as well too. So when I came back again with another $5,000 or $10,000 trading account, I started really focusing on those things that did well for me. And that's how I started to slowly get started. I still made a lot of mistakes, but that's how I slowly got started. So my whole encouragement to you when you're watching this video is I hope that my whole thing through this video here is to give you education on what's coming. But this little section here is my hope is that if you're not doing bad, or if you're not doing well in the markets and you maybe slapped around, maybe have a look at that. Okay. And I hope that this is going to help you moving forward when it comes to your trading. Because you can do well out of trading. We're just got to sit back and have a look at that. But back to what I was saying back with cycles, right? Nothing ever stays the same. And a lot of us think when we're in the moment, right now in the moment, we think, oh, this is the way it's going to be forever, right? Especially like me when I'm trading and I'm doing so well, right? It's like, oh my goodness, this is amazing. I'm taking the last 3 or 4 trades have been stellar trades. It's been absolutely incredible. Oh my goodness. And we think, and we're making all this money. We think it's going to continue. But what ends up happening after we have an absolute stellar run? We do something and we might lose a little bit of money. Right? So then the cycle continues. So one of the hardest things in this whole big cycle thing is most humans are focused on what is happening right now instead of stepping back. So, okay, where am I in my cycle? Like, okay, this is happening, and this is a self observation sort of thing, plus also a big picture thing. And so most people think when it comes to these cycles, most people think that the last 10 years is going to be a continuation for the next 10 years, which is not going to be, which means what I mean by that is that, we've seen a lot of buybacks of stocks. That's probably going to slow down because, it's not going to be like that. There's going to be, the government keep printing money just to bail everything out. Yes, we're going to see that initially, but that's going to start to taper down, and we're going to start to see a lot more bankruptcies, a lot more companies going underwater without the government actually coming to assistance there. Maybe initially, over the next say 12 months or so, but after that, we're probably going to start to see, a lot more bankruptcies and so on and so forth. So everything goes in cycles, and so and this is one of the biggest things for you guys is that if you're trying to get ahead in your life in anything, understand the cycles of why you do things. And it's such a big thing. Like for me personally, I don't know why, but when I was always trying to, I don't know why, but in winter here in Australia, winter, I don't know why, but the cycle was I'd get really, 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 get in amazing shape, like really lean, absolutely amazing physique in winter. What the hell is that? And then in summer, I'd let go. I didn't understand why I was doing that. So understanding that, now I can actually break the cycle and start to do things a little bit differently. So let's actually continue here with the interview with Ray Dalio.
See it, and it takes it goes back 500 years, and it shows real GDP. In other words, the economic activity going back there, and there's a line, and you don't see these depressions, as we're calling them, even on that line. They barely wiggles. When you go into it and you look at that piece, that's what it looks like. GDP falls 10%, unemployment goes up, and it passes. And because the greatest force is the force of adaptation and inventiveness if we can operate well together. So that's what I think it's going to look like over this period of time. It'll pass. The world will be very different. There'll be a new world order. But it will pass and we'll be inventive, because what we're dealing with now is just money and credit. Money and credit is just digital. I mean, there is real goods, services, those are real. But everything else is just accounting. And so when you change the digits and you work those things out and you work yourself through, that takes, a couple of years at most, kind of. And then you come back into a restructured environment. And it could be said that it is really healthy in many ways, because it is a stress test. Because if you look at history, people have sometimes they get weaker, or they're not prepared to, in many ways. Weaker in terms of maybe they don't build enough savings and they operate that, or maybe they emphasize luxuries over necessities. It's a reorienting type of experience that in many ways makes us healthy, even appreciating the basics of life.
Right.
So there's something that Ray Dalio said there, and I really want to encourage you when watching this video. Is firstly, he mentioned the word adaptation a lot here, and I think this is one really big thing I want to encourage you when moving forward, in your life, is that the powerful thing, not only in your life but in trading itself, right, is to have the ability to adapt to the current situations. So you may get into a trade, and you may be so focused on this trading doing so well, but when it doesn't, you don't know how to adapt. So that's one of the biggest things that's helped me with my personal trading, not only personal trading, but just in life in general. Is that adaptation is adapting. I remember back in 2008, 2009, somewhere around about there. I don't know, if you type in John Howard cancer into the YouTube bar, I actually did some videos back then, and I had cancer, and I went from trading 12 plus maybe 10, 12 hours a day, 7 screens, all the different types of markets, but really, really unhealthy, never going to the gym, never taking care of myself. I had to adapt really quickly when I had cancer to start to take care of myself, start to sleep better. So I had to adapt really quickly to that situation. And I find the best leaders out there, and I also believe the best leaders out there are also the best traders out there. Now, follow me here, is the best leaders, what do they do? They can handle pressure, and they can make good decisions under pressure. What does that mean in trading? Trading means you're in a trade and it might be losing, it might be pulling back against you, or you're not sure about that, but you can make good decisions under pressure. That just simply means just staying calm and say, okay, what do I do here? What's the best thing? It's not like, oh my goodness, I'm going to lose a lot of money. That's the worst thing to do. And then the second thing is basically, I just forgot the second one. Anyway, is basically adapting to that whole situation. So that's basically what Ray Dalio is talking about there. And the second thing, guys, is one thing that I've been doing myself a lot lately as well too, is that I've been really minimizing a lot of debt, like even a car loan debt that I've had. Probably this week I'm going to be paying that out. So I don't have any more car loan debt. I've got like a website software that I've been paying month by month. I'm probably just going to hit that. I'm just going to pay that maybe for a whole year and not have that month by month coming out. I've got like a life insurance policy coming out. So I'm going to be paying this stuff. But what I've also been doing, especially this whole year, is I've been saving so much money this year, because I don't know what's going to happen and I don't know how everything's going to unfold. So for me personally, I've been in a super saver mode when it comes to that. So I've had this, and it's a buffer, right? So I have money in my trading account that I make money from, but then I also have a really good bulk of money in my actual bank account, and it just sits there. And obviously I live off that and so on and so forth, but it just sits there. And I do whatever I can to whenever I make some money and so on and so forth, I might pull some out and continue to add to that bank account to continue to add to savings. And I do that because I want to make sure that I'm taking care of myself, especially through this time. See, in the past, I would have probably maybe 90% of my funds in the trading account and 10% in my bank account just to live off, and then I could have the money in there. Now it's like maybe 50-50. And actually, it's now probably 60-40. Maybe 60% of my cash is in my trading account, and then the 40% of cash is in my actual bank account, and it's just sitting there. Now, if I ever see the need to deploy some of that cash that's in my bank account to a really good, amazing opportunity, guess what? I can simply transfer some of that cash into my trading account. Literally 1 or 2 days later, it's in there, and I'm getting ready to take advantage of opportunities. But that's the reason why I have money in my trading account as well too. When I'm trading my trading account, no more than probably, like right now, I probably have around about, I'd say 20-25% of my entire trading account actually in the actual market itself right now with different trades. So I've still got 75% of my capital there waiting to deploy to different opportunities that I see. And that's all. That all comes down to risk management. I'm in different positions right now, but I'm trading very small, maybe 5% of my account on different trades, and that's also keeping me calm as well too. So I want to encourage you is that what can you do to start to minimize your expenses? You may not like it, but what can you do to minimize your expenses to start increase your savings? Because this may hurt you as well too. What's coming over the next couple of years may hurt you, and I want you to maybe set yourself up to have a bit more safety behind you. And one thing that I have found is that as soon as I started getting some sort of savings behind me, as soon as I started doing that, I started making much better decisions because I had a safety blanket behind me, so to speak. Like, everything's good now.
Just popping in here with a couple of questions from our online audience. I mean, the main question early on was just how difficult do you think the days ahead are for the economy? And you've answered that very vigorously. Like using that word depression, that's a very strong word, and it's. Tell me if I have this right. It feels to me like what you just said there is stronger than most people in the market seem to believe. The market is behaving as if, we've had the bad news and it's sort of kind of wants to come back. And a lot of people seem to think that within, I don't know, a year, we'll be back where you are. You're saying, no, it's going to take longer. Does that imply that there is basically a sort of some systemic shocks that the market hasn't yet fully seen, perhaps to do with the inability of some players to handle the extreme levels of debt that are piling up right now as people can't work?
I can't speak for what everybody's thinking out there. The markets are off depending on what market and depending on what country you're in. Something in the vicinity of 25 to 45 or 50%, depending what currency you're managing in. And so if you're talking about emerging markets, they're worse because they're not going to get as much and so on. I can describe what I see. Okay. We see something like $20 trillion of losses. Okay. We see, so if you work that through and you say you don't have money and you don't have credit, your business can fail. This. We see this all around us. So there can be failures when there can't be payments. And so the question is, who gets what check to make those payments and get past it? But we're going to have a giant restructuring of the IOUs, and we're going to work out when hospitals can go broke, because this is terribly costly for hospitals, and they will not fully recover their losses. Hospitals will go broke, even though we know that they need them. So when you have to go entity by entity through this, and then you'll go through the process of who will pay. So this is not, some people mistake this as there is a virus, and the virus may come and go. Okay, maybe we never see it again. I don't.
All right, so what Ray Dalio said there was a few things. The first thing he said is going to be a giant restructuring. Again, I'm going to talk about that's the debt. Now, he also said something as well too, right? He also said that hospitals can go broke. Now, why can hospitals go broke? Hospitals can go broke because hospitals are government, right? So that's where it's going to be a giant restructuring in the IOUs. It simply means, in a nutshell, that the government, all this printing of money, is basically printing of money and saying, listen, if you lend us this money, we'll promise to pay you this much money plus a little bit of interest, if there is any interest in some of these bonds. So that's basically the reason why there's going to be a major restructuring, and a lot of these people, and this is where it's a really, really, really big threat to China. The big threat to China is because China, I think it's like $1 trillion of IOUs basically to China. And now China is already becoming a world dominant power. We all know that. China's all over the place. It's taking over Hong Kong, Thailand, and a lot of other places. Hong Kong's already taking over, and it's that rising power. And it's now challenging the US. And now if the US can't actually pay America, if the US can't pay China their IOUs, I don't know what's going to happen. There could be another major war in place because China's already starting to fight every country out there, taking on everything. So China's becoming its own world power there. So that's the reason why. Like what's happening right now, giant restructuring. And that's the reason why it's going to be very, very painful of what's going to happen over the next 2 or so years. Now, the good thing about this, guys, is that it's from now, say 2022 to basically 2023, is probably going to be the start of a new rebuilding phase. So we're not going to be in this for 10 years, which we're not going to keep going through this 10 years. As Ray Dalio says, so it's going to say 2 or so years of restructuring these IOUs. And we're going to be in a different system moving forward. And a lot of these sectors, as Ray Dalio says, different sectors, a lot of these sectors that are government-based, such as hospitals, can go broke. Now, that's really, 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 really sort of, what's the word for it? To me, because I see, especially here in Australia, like, I don't know if that's the same here for Australia or not, but from here in Australia, I see a lot of infrastructure going into hospitals. So it's really, really interesting to see what's going to happen here with the way this thing plans out, and so on and so forth.
I don't think that's likely, but I mean, the people who tell me say, but who knows? But if it never came back again, there will be those who are broke and who will have loss of income. We're going to change how we operate in a way. The supply lines are going to change. In other words, self-sufficiency. What is self-sufficiency now going to mean? Do we have enough of this and that? We're going to restructure our economy and restructure the financial system in ways that mean we are not going to go back to the way it was.
So do you see systemic threats to the financial industry as great or greater than happened in 2008?
Yeah, this is bigger than what happened in 2008. I'll distinguish it. In 2008, we had banks. It's the same thing, meaning you have a certain amount of leverage, things go down. Too much leverage means you're broke in accounting terms. So then you look around and you say, who are the systemically important entities that you don't want to go broke? Because do you want to lose those banks at this time? And then you can make up money and make up credit, and you can keep them alive in some way. And you did it with banks, and through the banks there were the mortgages, and that's what it looked like. This is more complex than that, because there are the banks, and then there are all of those that are beyond banks. All of the little businesses, all of those in all the different places that are beyond it. And it's a bigger crisis, and we have a less effective monetary policy because interest rates declines have reached their limit. And just buying financial assets by the central bank and buying the normal financial assets won't work. They have to buy the debt of the government And the government, or the many governments, have to be effective in getting buying power and production to those who need it around the world.
I'm going to ask one last question and then I'll be back at the end of the hour.
So as you can see, Ray Dalio was saying there that this is going to be worse than 2008. And that the way that I see it, and let me actually put this in simple terms for you. 2008, we didn't actually have a lot of debt behind us. There wasn't a lot of printing of money back then in 2008. 2008, obviously banks went too crazy. They got too greedy, and they started to load up on try to make all this money based on the in mortgages, right? So it was basically a mortgage crisis with banks, and obviously that then went down to the individual who then loaded up on too much leverage. So too much leverage, those individuals that did too much leverage on the actual mortgages because the banks were lowering it, they also got really affected as well too, because they just, they thought like I was saying in this video, they thought that what is happening right now is going to continue happening. And and so what ended up happening was the property market wasn't moving, so therefore they couldn't continue doubling up. The banks were now in massive debt because they were just doing these ninja loan, no income, no job loans as well too. And also then therefore before what ended up happening, the whole thing came down because of too much leverage and too much debt, as Ray Dalio said, and that was the banking crisis. The government at that time didn't have a lot of debt. So what they did is they came in and they started to print a lot of money because they didn't have a lot of debt, and then that could actually then fill that gap in the banking sector. And then what ended up happening was basically they could then start to reboost things and start to get things going again. Now they didn't really get things going on the ground level. It was just more like a financial asset type thing, fill the banks and so on and so forth. And so that's what's happening through there, right? It was just a banking sector. Now it's a worldwide thing. And let me put this in simple terms. Before it was a banking sector, and they could print money and then obviously do that. Now it's basically a government, right? It's the government sector, and that controls and basically runs everything that's happening right now, laws, regulations, and so on and so forth. So that's what's going to get restructured. Banks got restructured and so on and so forth back in 2008, and the government got there. Now it's the government and all everything out there. That's going to be the major restructuring that's happening right now. This is the reason. That's the reason why this is so much bigger than 2008, because now the whole government is going to restructure the way that we actually do things and so on and so forth.
Sorry, let's be back to you. But though, given how bleak that is, people are asking what kinds of industries, organizations, companies have the best prospects of thriving going forward.
Well, that's the beauty of it. There are two types, basically. There are those that are stable, meat and potatoes, not leveraged kind of companies, the Campbell soup equivalent, like everybody's going to use them all time kind of thing. And then there are the innovators.
All right, so I talked about the sectors that are going to do really well. What Ray Dalio was mentioning there, and I don't think, if I'm not sure if you understood it, but he was saying, which makes sense, the sectors that are going to do really well. One sector was the meat and potatoes, right? The companies that we're always going to use no matter what, and that is basically food outlets. So wherever you do your shopping, and wherever you go to buy your grocery shopping, those things are probably going to continue to do really well, especially as inflation picks up and so on and so forth. I'm sure where you are right now that the grocery bill is getting a little bit bigger and bigger and bigger each time. So when we're looking at what sectors are going to do the best, that's one sector out of all these sectors. That's one sector that's probably going to continue to do really well throughout this time, because we're always going to continue to go to the shops and also, spend money and buy our food groceries.
The innovators, like we're talking about Marco, you had Marco on before, and that new innovation, those who can adapt well and innovate well and don't have balance sheet problems. In other words, they have strong balance sheets, so they're going to be able to play the game without having that. They will be great winners. And so there's always new inventions, new creativity, that is the new adaptation, that becomes a company and an entrepreneur, and they're going to do great, plus the stuff that we're always going to need. Those are the things that are going to do great.
Thank you, Ray. Ori.
Thank you, Chris. So I guess I'd like to stay with the market for a minute. Obviously, it's something that interests so many people, and the state of the market doesn't always correlate with what's going on in the economy. And the market and its players have changed so much over the past, 70 years or so, 70, 90 years. So many more algorithms and machines and passive investing. And how do you think that sort of affects how the market is behaving right now, how it's going to recover over the next, few years as the economy recovers?
The basic fundamentals of money, credit, crisis, who has what income, who has what expenses, who has what balance sheet, and how do we deal with money and credit. Those things which people often lose sight of because they happen only once in one's lifetime. This period, you have to go back to the 1930s as the last period. Those fundamentals of what a bank is and the associated process have existed all through time. Then it's like technology changes. Technology evolves. And so the capacity to take one's thinking and to put them in algorithms. We've been doing this for 25 years. The way we operate is to take a principle, how would I deal with that situation, and write it down, put it into an algorithm, and then because the capacity to think has been radically enhanced because the human mind has a capacity problem. It's unique in inventing, but it can only process so much at so time. So when worked in partnership with the computer, which has the capacity to take that thinking and replicate it and do all of that leverage thinking and think in an advanced way, that is the advancement of our time. And so you're seeing that. So when you think algorithmic, it's, you got to break it down as to what it is. Is it sensible cause-effect relationships that are being dealt with? It all comes back to, do you have understanding, and are you successfully betting on a cause-effect relationship? Because that's the only way you're going to make money. So, but the computer can do it and process that thing in a much more advanced way. So that's what's going on. There will be people who will make the mistake of just applying machine learning to the markets. And that won't work because of certain things. I guess I should explain because you asked. So on algorithmic decision making, there are two ways you can get your algorithm. You can specify the instruction to the computer and have it follow that, and that'll enable your thinking. Or you can have the algorithm come from putting a lot of data into the computer and asking computer, what would you do and what's your algorithm? The key difference between those is, do you have understanding of the cause-effect relationships? You must have understanding of the cause-effect relationships to know what to believe in, because you can't always get that in your sample size. For example, what's happening now, you could not have run your computer and have it in your sample size, because you would have to go back to the 1930s to have an analogous period.
So what I want to do is, I want to. He's talking about the cause-effect relationships. I mentioned this earlier on in this video. One of the biggest things that has helped me with my trading has been something similar to what Ray Dalio is talking about, and that is looking at all the trades I take. And so he's talking about the cause-effect relationships within the economy. What's the cause? Basically, the cause, what actually happens, what do the government do, what's the actual steps they're taking, and then the effect, what's going to happen based on that. And if we go back through history, we can say, okay, well, the government was at this situation and they did this, and this is what happened. And if you look at right now, you look at, as say, an analogous period where the government is at this situation and they do this situation, which is the cause, the effect is likely to be this. We can do that as an individual trader as well too, right? Because we can look at all the trades we take and we say, okay, then the cause is that I take these trades. Okay. Now the effect is that these certain trades, the effect is I do really well. These certain trades, I don't do really well. So I can start to add the cause effect relationships in it. Now it may come down. Then the second step is what's the cause effect relationships of how I'm managing these trades. Maybe I'm getting into good trades, but now I'm not managing these properly. How do I manage? What can I start to apply to these trades to start to manage these trades properly? Maybe I'm getting in, and then I might get in today, and over the next couple of days it doesn't do much, and I might get scared and get out. And before you know it, most of these trades a week or two later run on for profits. Like I just don't know with the way you're trading. And then the next situation is your cause effect relationships of how you're managing your money. With me personally, with that, I realized that if I started to get up, it doesn't matter how much money I had in my trading account. If I started to get up to a certain number of how much money I was putting on per trade, I started making really, really bad decisions because I was emotional. So the cause was me trading too much, was actually causing me to go backwards. Wasn't the system. I may have gotten into a good trade, but I wasn't managing that. And the reason why I wasn't managing it properly, the reason why I wasn't managing it properly is because I was scared of losing money. The reason why I was scared of losing money was because I was trading too much. So actually trading too much of my trading account on any given one trade actually caused me to lose money. And if I just had a really good risk management, I would have made money on a lot of trades instead of actually losing money. And so once I started to adapt these, what are the certain trades that do really well? What are the patterns that certain do really well? Secondly, what are the management skills? And thirdly, what are the risk management that I need to apply? And once I started to do this slowly over time that I could start to see, then I started to make really big progress. This was probably the best progress the best thing that I could do is by doing that. And so I encourage you is that even if you're just trading randomly right now, put all your trades into a spreadsheet. I mean, every time you take a trade, just put all the data into a spreadsheet. And then maybe once a month, go back over all those trades. Like you go, 2 weeks ago, I had a trade on JP Morgan and I bought some call options or whatever. Well, then go back to JP Morgan, look where you entered, look why you entered there, look what actually happened afterwards, and so okay, then, did it work out well, did it not work out well, was there a pattern? And then you'll start to realize that over probably 5 or 6 months of this, maybe longer, especially over 12 months of this, you'll start to realize that there are certain patterns that you take that you don't even realize that do really, really well. And then your job now is just to try to start to focus more on those patterns, less of the things that don't work. And that's how you can go from losing a lot of money like I did when I first started to doing really, 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 really well from the market, because you just stop doing the stuff that is actually causing you to go backwards. And because at the end of the day, if I know that certain patterns overall are going to do really bad for me, the cause is me taking these trades, the effect is losing money, then why would I keep doing that? Once I can see that, I'm like, oh. And then then the cause of me doing really well in the markets is taking really good setups with good risk management and good trade management. Once I have those three combinations, then I know I'm going to do well long term. And then the longer I trade, the better I get at. I still screw up every now and then, meaning I just may take some trades that I shouldn't, and so on and so forth. But that's what I wanted to talk about with you there. So anyway, guys, I hope that you've enjoyed today's video. If you did, subscribe. Give me a thumbs up and let me know what you think about the sections below. I've really opened up in this video too. I've really opened up a lot about my history and my past, and I hope my whole purpose in this video was to give you some guidance and give you maybe some tools as well too of how Ray Dalio, which is a big macro thinker, and we can apply that to say to you as an individual trader, and how you can start to apply this to your trading moving forward, so you too can be in the markets 4, 5, 6, 10 years from now as well too, because most traders get blown out of the market within 12 months. I don't want that for you. I want you to become a good trader. So even if you are doing really bad right now, hopefully this video has also served you in a way where I can actually give you some tools to assist you in you becoming a much better trader, but slowly getting better each and every day. Hey traders, John Howell here. Thanks for watching my video. For a limited time only, I am giving away free access to my brand new trading course. I've put all my most powerful systems, strategies, and trading techniques that I've learned over the last 15 years and put it in this course, and I'm giving it away for free for a limited time. See, in this brand new Guide to the Markets by the Boys trading course, and you can get it when you go to johnsfreegift.com, you're going to learn, firstly, you're going to get access to a brand new training course for 90 minutes, and you're going to learn all the details step by step to my #1 trading system with over a 90% success rate that works on any market and any time frame. You're also going to learn 3 powerful chart reading and trading techniques. You're also going to learn 2 more powerful trading systems, and also you're going to learn 7-figure trading secrets, mindset techniques, and so much more. There's top 13 mistakes you're going to learn, the 10K per month formula, and so much more. No, this is not a get-rich-quick scheme, but if you are struggling with your trading right now and you need help, then for a limited time, you can get free access to this. So go to johnsfreegift.com right now, or click on the very first thing in the description, because for a limited time, I'm giving away. So go to johnsfreegift.com right now and start getting access to this full complete trading course, plus also the free training with my #1 trading system with over 90% success rate. Go to that right now, and I'll see you on the next page.